ULI and Heitman partnered on a survey of 25 different institutional owners and investors to understand what they thought the impact of climate change and major storm events would be on real estate. The conclusions that they reached were across the board that those sorts of issues do make a difference from investing for most investors. However, some of the investors that we spoke with ultimately commented that despite the fact that they knew those risks were out there, they found it difficult to incorporate them into their underwriting for fear that if they did that, they wouldn't be competitive in buying assets in certain coastal markets. But generally what we found was that for those investors where it was impacting their underwriting, they were not ruling out investing in some of the markets that would be viewed as riskier. But in fact, what they were doing is just being more thoughtful and more careful as to how they invested in those markets. So being careful of the locations within specific markets. And the other thing they were doing was making certain they were balanced in their portfolio in terms of their exposure to some of those riskier markets. When the investment community, including investors, owners, and insurers, is looking at the issue of resilience, especially as it pertains to particular buildings, the challenge really starts with understanding what the risk is in the first place. And so what we have seen is a number of investment firms are starting to use more detailed flood maps that give them a better, clear sense of the exposure of an individual building to an issue around rising seas or that might be incurred from storm surge. Understanding what that risk is then can enable a building owner to be more thoughtful about how to protect that building, taking common sense measures that might cost money in the short run, but protect the building better in the long run, such as raising utility and telephone systems to upper floors, improving drainage around a building, perhaps providing an ability to seal that building off at its first floor levels, or even in a more comprehensive renovation, putting in hurricane-proof windows so that you don't get storm spray or wind-driven rain coming into the building on upper floors. Enhancing resilience in an asset can make a big difference in its long-term value. Despite the fact that you might be making a material investment up front, whether it's making changes in terms of where your utilities are located or adding hurricane-proof windows into a structure, the reality is that given that we expect an increasing frequency of storms, given that we would be expecting to see more storm surge, rising tides that would, at least at high tide levels, threaten more buildings, the more that you can do to protect your building from being impacted by those types of events, the more you're going to add value. And while to date, the strategies of many firms or owners has been to rely on insurance, on a going forward basis, it's expected that insurance will become more costly and maybe not necessarily as available and likely with a higher deductible. All of those factors put greater risk on the owner. So taking steps sooner to protect the building from those risks, even if there's a short-term capital outlay, in a long term should pay off.